Hi and welcome to the Market Alert for Wednesday, the 29th of October 2025. So retail and central bank dip buyers emerge as gold drops below 4,000. There you go. It was said yesterday that the central banks would love the fact that the futures market, the COMEX, have battered the price below 4,000. So now we're starting to see some buyers. We'd expect de-risking and profit taking by investors to be met by dip buyers from other segments of demand, including central banks and other physical buyers, ultimately keeping reversals relatively shallow. So yes, we'll get to that when we look at the metals. Fed preview for the rate cut, end of QT will be broadly supportive of risk. I'm not so sure. I'm not so sure about that. They're expecting a quarter or 25 basis point cut. Soft signals that a December cut is likely, and more likely than not, an announcement of the end to QT. So if they're getting rid of QT, which is quantitative tightening, then they're going to go back to QE, I suspect, and that's just going to be off we go again, the same as we started in 2009 with the QE. So yeah, it's interesting to see this. I'm going to see it very interesting because I think it was 2018 the last time they tried something like this, and there was a big correction. Actually, it was the other way round. It was when they started QT and they got a massive correction. I think it was December 18, and then they decided to hold back, and then they brought it back in again post-COVID. So, yeah, if they're stopping QT, why are they stopping QT? Because they won't have actually cleared the balance sheet. That's for sure. So perhaps a bit more research is required there, but this doesn't bode well. It just thinks obviously that the data has shown that the economy is imploding, and they're sort of trying to preempt that. I don't know. Something's not right there. US stocks were ultimately mixed, although most indices extended on record highs, with tech doing the heavy lifting. And again, Nvidia supports rally as Fed Magic 7. Earnings await, so we'll be interested to see that. Probably just banks buying back, or rather the businesses buying back their own shares to support the last quarter is likely to be the issue there to support those numbers. Don't fight retail. They've poured in nearly 300 billion since April, since the S&P's 500's April the 8th low. Retail traders have poured in roughly 292 billion, more than any full year from 2019 to 2024. That being the case is a classic sign of a market top coming. If they could continue to do that at the moment, that's fine. And with the rate cuts, the market continues to move to the upside. But good help those that are pouring in this sort of money in the retail sector and expecting to get any sort of return from anybody that's been in since 2009 are living in cloud cuckoo land. But for the time being, they will enjoy it. I've been approached a few times of late of some sort of S&P trading, not necessarily trading, but investing £200 a month with one of these apps because the returns have been fantastic. Well, they might be at the moment, we can see why. But the higher this goes, the less chance you've got of obtaining that. It's sort of borderline Ponzi scheme. Economic news for today. Well, the only one that's of interest, of course, is the FOMC meeting minutes. We're looking at the rates being cut to 4% there. That's what we're looking for there. So we'll just wait and see what happens this evening. I suspect they'll get the cut 25 basis points down to 4%. I'm more interested in what's going to happen in December, to be honest with you, because we really are getting into the realms of cutting things very sharply, QT ending, and then probably QE coming back on stream. Right, let's have a look at the markets and kick off with the Dow. So the Dow putting in a new all-time high for yesterday. We're now at 47940, as I mentioned before, 48,000, no problem at all. That'll probably be achieved with the rate cut later today, if not before. So the Dow heading for 48,000, which is massive, isn't it? So you can see in the monthly chart there, prices breaking out. We had the April the 8th low, where the market came back to 62 and the 50 EMA. And since then, prices have continued to move to the upside. We've got the new all-time high for yesterday. And just out of curiosity, what is the current move from that April low? So let's just have a quick calculation. We're up 11,000 points. Nothing to be too concerned about there. Wow, 11,000 points up. Wow. Since April. So yeah, it's certainly out of control, isn't it? Wow, that is some move. And in the 30-minute chart for yesterday, we kicked off early, didn't we? What time was this? This is 10 a.m. The Dow futures moved higher, and off we went there, with prices moving sharply to the upside. Yes, some decent moves there, to say the least. So, yeah. Meanwhile, in the German DAX, we're still stuck in this sideways situation here with this sort of ascending triangle pattern. Expect the DAX to play catch up. It usually does. If the Dow and everything else continues to make new all-time highs, the DAX will soon be back up at the 24,774 level, despite the German economy falling apart. 30-minute chart, we started to move higher, got it stuck in a sideways move. The 20-bar moving average came into play. Market was sent down to the low, and as soon as we got to the low, the buyers came in, and then we moved back up to the close. We got a retracement in there, and then prices down to yesterday's low on the overnight, with the market now starting to move back to the upside there. Meanwhile, in the S&P 500, I think we do have a new all-time high overnight, because there's no green line, pink line, above the high of yesterday's bar. So we've taken that out. 6911. So again, 7,000 is on the cards, isn't it, for the S&P as well? It'll be interesting to see what happens when we get to that level. So yesterday, moving up, and then into the cash market, same thing, market moving higher once more as well, after an initial pullback there. So prices up on the overnight as well, towards the high. They want the rate cut, and what with the earnings as well coming out, which will be fudged by the company accountants and financial officers to make those numbers look good. But underneath, the company's buying back their stocks. And in the FT 100, you can see that we've got a new all-time high heading towards 10,000. I very much doubt we'll get to 10,000 before Rachel from accounts comes in with a budget. But you can see there, this is just a lunacy, particularly if you believe any of the rumours that are being put forward on the internet at the moment of VAT being reduced from 90,000 turnover to 30,000. That would destroy all small tradespeople, that would. Now, we have got the MDT, which is coming in April, that's confirmed, where you have to submit as a sole trader if you earn above 50,000, that you have to submit 4 quarterly returns and then a final 5th one. And that's without property taxes and other changes that are already proposed. 8% or 9%, isn't it, national insurance level on earnings from rental properties and all sorts. So we'll just have to wait and see, won't we? But gosh, it's going to be. I never really watched the budget, but I think majority of the population are going to be glued to this one to see how they're going to be financially raped, frankly. And I'd love to know why it's been delayed a month as well. Maybe it needs a few tweaks, or she hasn't ripped us off enough. She's going to find another way of doing that. Wanted a bit of extra time just to make sure that when the knife is in, it is also twisted too, just for good measure. But anyway, the FT moved back slightly to the previous overnight to low, and then moved to the upside, but not moving so fast at the moment. But it probably needs a breather, having moved as much as it's moved, because this is an unusual move in the FT 100 for sure. Right, let's have a look at the US dollar. So the US dollar moving higher after yesterday's down move. Don't know why, because if they cut rates, it's usually a bad sign for the US dollar. So it's being supported at the moment, despite the fact that it's losing its purchasing power along with all of the other currencies as well. It just happens to be the best one of all of them. but they're all fiat currencies, and all fiat currencies in the end go to zero, which the US dollar has lost about 90+% of its purchasing power. So let's have a look at the metals for yesterday. So yesterday we traded down below the 62% retracement. I was hoping they were going to smash this a lot lower, so I could actually buy at 42 or 40, but it doesn't look like they're going to do that. We are back $10 from the all-time high, or actually we're not. Oh, we're 54. What was the low of this yesterday? So about $9 by the looks of things then. So 45, yeah, $9. I was hoping that we would get a smash, as I say, but the average pullback when you get these sort of really big moves is around $10 as well. So $9. So it looks, we've got the buying coming in now to support this and bring the price back, which, like I say, I'm very disappointed about, because I was hoping they would smash it lower, and then I could actually get more, still the opportunity to do that. Whilst I'm thinking about it, the LBMA came out yesterday, and the forecast, they had the annual conference in Japan. Don't know why. Good carbon footprint there, isn't it, when it's based in London? So the LBMA had the meeting. The forecast for next year, this time next year, 26th of October, is $5,000 for gold and $59 for silver. So that will be interesting to see if that pans out, but that's what was put out yesterday by Chris Marcus from Arcadia Economics. So silver trying to move up. If the selling's over, the selling's over. But one other thing that's interesting, we're no longer in backwardation either. The nearby futures now is actually higher than the spot price as well. That was another thing that was noted yesterday. So I expect the market to sort of get into a bit of a sideways trading range now, unless something sparks it to move sharply to the upside. So yesterday morning, I thought, great, we're on target here. We started the sell-off, but then it just stopped at the 45.50 level there. And since then, we've been moving back to the upside quite sharply. Actually, we're up $2 already. $1.50. I think that's going to be $1. Yeah, $2. Nearly $2.50 of the sell-off that we saw. Meanwhile, gold struggled. Gold struggled yesterday, but it traded down to the 89% retracement that we drew in yesterday. We've got a bit of buying in there. We're oversold. We haven't crossed over yet, but the market's oversold. No doubt it'll be moving up after tonight's rate cut, if it actually materializes. 30-minute charts, you can see yesterday morning it was just a hammering to the downside to the S2 cluster of volume. Market was oversold. Market crosses back, and then we've been moving to the upside. However, we did have a sharp spike to the downside yesterday evening, but no selling. There was just a markdown, and then the market was brought back. You see the buyers coming back in there, and now moving to the upside as well. So it looks like the correction in gold is over. Let's have a look at the gold-silver ratio. So in the gold-silver ratio, of course, silver moving better than gold yesterday and overnight, so which is why you're seeing this return now. Like I say, I'm quite disappointed, because I was hoping we get back up towards the 89 level, and then again you get more value for your money, but there you go, it wasn't to be. Saying that though, it's still very cheap, isn't it, compared to, if I can find it, there we go. Just come back to the 30-minute. No, we'll go to the daily. So we're still at 47. There's still $9 there to the upside, more than enough to have a go at. Well, actually, it's about $7 now, isn't it? Of course, coming back to $2.50. So yeah, plenty of potential there on the upside to get back just to the all-time highs as well. Right, let's have a quick look at yesterday's trades. So in the pre-market, prices were sideways, then we opened and moved sharply lower, all the way down to the low as we saw earlier. See the buying coming in at the low, and then we marched to the upside. And there are no signals. Market just moving off, just didn't meet the criteria for the signals yesterday morning. As I say, you can expect the DAX to now play catch-up with the Dow, the S&P, the Russell, the Nasdaq, and of course the FT as well. So moving into the afternoon, the market put in a sell signal, which was nice. We came back to the 200 MA, where the market then found support. We then had a potential buy signal that wasn't filled, and this was followed by a reversal with a sell signal, just trading from here down to here. So you get that retracement, Fibonacci retracement, and then the market reversing and moving back up with the US markets there into the evening until the market just becomes sideways to lower and choppy at that as well, which you can see. No idea what this was when I came back to the screen in the evening, noticed it and I thought, well, that's slightly odd, but I don't know what was behind that, but there's certainly some volume behind it for sure. So anyway, we head into the evening, the market's sideways to lower, and if we have a look where we are now, starting to move to the upside already. But as I've said in every market alert this week, expect the opening to be sideways to lower first off. Right, that's it for this one. I've waffled on long enough. Yeah, let's see what happens tonight with the FOMC meeting minutes and whether silver can maintain its move to the upside at the moment. So with that, have a great day, and as ever, thanks for watching. See you in the next one.